Look around you. The price of groceries, the cost of gas, your rent, your mortgage, the numbers on your credit card statement. Now imagine all of that quietly shifting because the US dollar is losing strength. This isn't some abstract Wall Street headline. This is about you, your family, your paycheck, your savings, your retirement. When the dollar falls, it doesn't send you a polite warning. It doesn't knock on your door. It shows up in subtle ways. A few extra dollars at the store, a higher interest rate, a vacation you suddenly can't afford. And lately, headlines have been buzzing that the dollar is under pressure again. At the same time, President Donald Trump has been speaking out about currency strength, trade, and America's economic position in the world. So what's really happening? Is this a short-term dip, a long-term shift, or the beginning of something bigger? Because here's the truth. When the dollar moves, the entire world reacts. And when the world reacts, your money feels it. From your 401k to your grocery bill, from the value of your home to the cost of imported goods, everything connects back to the strength of that green bill in your pocket. Tonight, we're breaking this down in simple, clear language. No confusing jargon, no economic textbooks. Just what it means for you and what you should be watching next. And trust me, by the end of this video, you're going to see the dollar very differently. Stay with me, because the next move in the dollar could shape your financial future more than you think. What does it mean when the dollar falls? Let's slow this down. When people say the dollar is falling, what does that actually mean? It means the US dollar is losing value compared to other currencies, like the euro, the yen, or the Chinese yuan. In simple terms, it takes more dollars to buy the same amount of foreign money. That might sound technical, but here's where it hits home. When the dollar weakens, imports get more expensive, and America imports a lot. From electronics to clothing, from cars to raw materials used in manufacturing, a weaker dollar can make those items cost more. Businesses often pass those costs on to you. That's how currency moves can slowly turn into higher prices at the checkout line. But there's another side. A weaker dollar can help American exporters. US goods become cheaper for foreign buyers. That can boost manufacturing, increase sales abroad, and support certain industries. So is a falling dollar good or bad? The honest answer is, it depends. It depends on timing. It depends on inflation. It depends on global confidence in the US economy. And this is where things get interesting, because when political leaders speak about the dollar, especially someone like Donald Trump, markets listen, investors react, currency traders move billions in seconds. The dollar isn't just paper, it's power, it's trust, it's global influence. And when that trust shifts, even slightly, the ripple effect can be massive. But what exactly has Trump been saying? And why are some investors paying very close attention? Let's dig deeper. What Trump says about the dollar. Throughout his political career, Donald Trump has had strong opinions about currency strength. At times, he has argued that a very strong dollar can hurt American exports by making U.S. products more expensive overseas. Other times, he has emphasized economic dominance and financial leadership. That balancing act matters. When Trump talks about trade deficits, manufacturing jobs, or bringing supply chains back to the United States, currency value is part of that conversation. A slightly weaker dollar can, in theory, make American goods more competitive globally. But markets don't just hear policy, they hear tone, they hear direction, and they try to predict what might come next. If investors believe future policies could increase government spending, expand tariffs, or pressure interest rate decisions, they start repositioning money. That can impact bond yields, that can affect stock markets, and yes, that can influence the dollar. Currency markets move on expectations as much as reality. So when Trump comments on the economy, global trade, or the Federal Reserve, it's not just political talk. It can shape financial expectations worldwide, and that shapes capital flows, which directly impacts the dollar's strength. Now here's the part that matters for you. When global investors shift money out of dollar-based assets, demand for the dollar weakens. And when demand weakens, the value can drop. But this story isn't just about one politician. It's about inflation, interest rates, global debt, and America's role as the world's reserve currency. And that brings us to the next critical piece: inflation, interest rates, and your savings. If you felt like your money doesn't stretch as far as it used to, you're not imagining it. Inflation has already taken a bite out of household budgets. Now imagine combining inflation pressure with a softer dollar. When the dollar weakens, import costs can rise. That can feed inflation. And when inflation rises, the Federal Reserve often responds by raising interest rates. Higher interest rates can help strengthen the dollar, but they also make borrowing more expensive. That means higher mortgage payments, higher car loan costs, higher credit card interest. It's a financial tug of war. If rates stay high to defend the dollar and fight inflation, your debt gets more expensive. If rates fall to stimulate growth, the dollar could weaken further. Every move has consequences, and here's where it gets personal. Your savings account interest rate, your retirement portfolio, your home value, all of it responds to this delicate balance. A falling dollar can sometimes boost stock prices in multinational companies because their overseas profits translate into more dollars. But it can also signal global uncertainty, and markets hate uncertainty. So the big question becomes, are we looking at a temporary adjustment or a structural shift in the dollar's long-term strength? Because if it's the latter, your financial strategy may need to adapt. The global power game. The US dollar isn't just America's currency. It's the world's primary reserve currency. Countries hold dollars. Commodities like oil are priced in dollars. Global trade runs on dollars. That status gives the United States enormous power. But in recent years, some nations have explored trading in alternative currencies. Even small shifts in global trade agreements can slowly chip away at dollar dominance. And when political rhetoric adds uncertainty, markets become even more sensitive. If global investors begin diversifying away from dollar assets, demand falls. And if demand falls, so can the currency. Now, this doesn't mean the dollar is collapsing tomorrow, but it does mean the financial world is evolving. And political leadership plays a role in how confidently global markets view U.S. stability. When Trump talks about tariffs or reshaping trade deals, investors consider the potential impact on international relationships. Trade tensions can influence currency flows, and currency flows influence your purchasing power. It's all connected. What this means for your investments. Let's talk about your 401k, your IRA, your brokerage account. A falling dollar can have mixed effects. Companies that generate revenue overseas may benefit because foreign earnings convert into more dollars. That can lift certain stock sectors. But if the dollar's weakness signals economic instability, investors may shift towards safer assets like gold or treasury bonds. Volatility increases, and volatility can shake confidence. If you're nearing retirement, currency swings matter even more. You don't have decades to recover from major downturns. Stability becomes critical. You don't need to panic, but you do need awareness. Diversification matters. Understanding where your investments are exposed to currency risk matters, because currency trends can quietly reshape portfolio performance. Everyday prices and hidden costs. Here's the part you'll feel first: everyday expenses. Electronics assembled overseas, clothing manufactured abroad, even certain foods imported into the U.S. can become more expensive with a weaker dollar. Companies rarely announce we're raising prices because of currency shifts. They adjust quietly, and suddenly your monthly budget feels tighter. Energy markets also respond to currency fluctuations. Oil is globally traded in dollars. If global dynamics shift, price volatility can follow. This is why understanding currency isn't just for economists. It's for families balancing budgets. Is this a crisis or a cycle? Currencies rise and fall in cycles. The dollar has had strong periods and weak periods before. The key is whether fundamentals remain solid: economic growth, productivity, innovation, and global trust. If the underlying economy stays strong, currency dips can reverse. But if policy uncertainty grows, debt expands rapidly, or global confidence erodes, longer-term shifts can happen. That's why investors listen carefully to political messaging, including Trump's. Tone matters. Direction matters. Stability matters. What you can do right now. First, stay informed, not fearful, informed. Second, review your financial plan. Are you diversified? Are you overly exposed to one sector? Do you have emergency savings? Third, think long term. Currency fluctuations are powerful, but they're not always permanent. Most importantly, avoid emotional decisions. Panic selling often locks in losses. Your financial future isn't determined by one headline. It's shaped by consistent, smart decisions over time. The dollar is more than ink and paper. It's trust. It's global influence. It's the foundation of your economic world. When it shifts, your life can shift with it. Donald Trump's words about trade and currency send signals. Markets respond. And those responses ripple into your savings, your bills, and your retirement. This isn't about politics. It's about preparation. The world economy is changing. The question is, will you be ready? Stay informed, stay alert, and stay connected, because the next update on the dollar could directly impact your wallet. If you care about protecting your money and your family's future, make sure you're following closely. The financial story is still unfolding, and you deserve to understand every chapter.